Hey guys, welcome back to the channel. In today's video, I will be talking about some important areas of support and resistance, as well as some ranges for Ergo. I'll be covering some moving averages, the Ergo Bitcoin ratio, as well as a comparison or fractal pattern to Cardano from the last bear market to hopefully understand where Ergo falls within this cycle. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. I'm fairly active over there as well if you guys want to go ahead and check that out. So first, I do want to talk about these moving averages here. The red one is the 20-week simple moving average, and then the green one is the 21-week exponential moving average. We talked about these two moving averages in the last video, and what we discussed was how this has been a very key level throughout this bear market. We first initially lost them right here in October of 2021, and then we flipped them right into resistance. All of these weekly candles came below this level, unable to get back above this, in fact consolidating under it, rejecting, and then turning over lower. And then we did have that move right here in April, that lower high coming up right into this level of resistance, rejecting off, and then continuing that structure of rolling over and then forming lower lows. But on this move that we had right here in August and September, Ergo actually broke back above these moving averages for the first time since losing them all the way back here last year in 2021. But unfortunately, when Ergo came back down to have that retest, it fell right through these moving averages, and in fact we flipped them back into resistance, and you can see that rejection right here just a few weeks ago. We've started to have a little bit more follow through, and now we're back down about 1/4 of the way into this range, with the support, the range lows at $1.65, and then the resistance, the range highs at $4.30. So now that Ergo has fallen below these two moving averages as well as rejected off the middle of the range, the next key area to watch out for is going to be the range lows around $1.65. And this is going to be a very strong level of support going all the way back here to March of 2021. This was a very key level in which Ergo started to turn around off this pretty big decline from that resistance, the $4.30 range high, came back down to this level and then started to reverse from there, going back up to this new uptrend, forming another all-time high. And then this level was also the pivot point back a few months ago here in July, in which Ergo started to reverse this big decline and then had that pretty impressive rally going back up to that resistance to range highs. So if Ergo does have another leg down and we do retest that low, really look out to see if buyers in demand start to step in. And if we do start to come back down to this region, that really sets up the potential for a longer term double bottom in which we would have two retests of this support. And if we can start to bounce from there and come back up to the range highs, that would give us a great structure in which we would look at this level as longer term accumulation. Now, I do want to make a point about this longer term range by comparing Ergo in this current market cycle to Cardano back in the previous market cycle. And we've done this before on the channel, but I really want to go in a little bit more extensive analysis between the two. And again, we're not doing this because they're similar in fundamentals any way, shape, or form, but we're doing this because Ergo really doesn't have a bear market to where we can look to. Really, it just launched in the midst of this very impressive bull market. So I'm going to look at Cardano just as an example of what's theoretically possible and where we could potentially stand within this market cycle. So here's Cardano, and what I want to focus on is this longer term range that it had back here, where from basically September of 2018 until the breakout point here in June of 2020, Cardano essentially oscillated from these range highs to the range lows, back to the range highs, from support and resistance for this extremely long period of time. And if I just take a measured move here, you can see that this accumulation zone lasted about 96 weeks. And that really does put into perspective how long we can spend consolidating in this bear market bottom. And if we just go over here to Ergo, look, we entered this range I have marked out back here in January. And if we take a measured move, that's so far around 42 weeks. So not even halfway through if we were to look back here to strictly looking at Cardano from the previous market cycle, which definitely has its own flaws. We can't just assume that this price action in the structure is going to exactly repeat itself. Now, that's not the point. We're just looking at what's theoretically possible. So, if we were to look at this and say, well, what happened about 42 weeks out, we could see, well, hey, we had, this move back up to the range highs, we had that rejection, and then we started to come back down to the middle of the range. And if we look back here to Ergo, that's essentially what's exactly happened. We've come back down, we rejected off the highs, we're back down below the middle of the range, and we're just in this longer term zone between strong support at $1.65 and strong resistance at $4.30. So my point I'm trying to illustrate is here, we can't really look at a longer term confirmed direction until we have a significant breakout. And we almost had a significant breakout back here in September. We had a move getting really close to it, but again, we had that rejection. The next few weeks, we came right back under, and this was not a very sustainable move. So looking here at Cardano again, then when we did eventually have that breakout, after that 96 weeks of consolidation, when we had that significant move above this, we came back down, retested it as support, flipped that longer term range high right back into support, and then we started to trend up from there. We made higher highs, we made a new all-time high, and went on this very parabolic like rally, kicking off and elevating that bull run. So really, we got to look out to that for Ergo and have some patience and recognize that, look, back in the previous market cycle, Cardano had another 50 weeks before it eventually started to move out of this consolidation range. So I really wouldn't have too much of the expectations going forward here into the next few months, other than the fact that we could have a move down to the range lows, we could have a move up to the range highs, but anywhere between this, we're still consolidating, we're still at the support, we're still at the resistance, and there isn't much we can really take away until either there is a breakout above the resistance or a breakdown below the support. So now I'm going to talk about the Ergo Bitcoin ratio. Very similar thing here. We did have a pretty big fake out, pretty big deviation above this range here on the Ergo Bitcoin ratio. But as you can see, we've come back down within this. We're currently retesting the middle of the range, which is around 8,900 Satoshis. That is the middle of this longer term zone we've been in, from the support at 7,000 Satoshis all the way up to the resistance around 11,300 Satoshis. So very similar to the Ergo USD pair on the weekly. I really am looking for a sustainable breakout. This one wasn't very sustainable because when we did come back down, we came down for that retest and did not flip the range high into support. Rather, we fell right back through it. We also fell right through the 200-day simple moving average, which is the green line on this chart. That's something we talked about in the last video, how we could potentially flip this into support. However, we did not get that. So if we do have a move coming back up this once again, really look to see if we can have a more sustainable move where we can start to flip this as longer term support, considering how this has been a very key level. Again, the resistance at the range highs, where we've basically been within this zone for a very long period of time. Even though we did have that big fake out, we're back within this. So just watch out to see if we can have a more sustainable move to either direction. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out this channel's partners over at ftx.us. You can check them out in the link in the description below and sign up through there, or with my referral code SNOWYCrypto, and get a 5% discount on exchange fees. As always, I hope you guys enjoyed, and I will see you in the next one.